China is applying Basel III rules as well, is basically disrupting the whole Western paper game. And the reason why I think China is opening up the Shanghai Futures Exchange to foreign investors is that it's all part of internationalizing their currency more, and also making it more trustworthy. Because if you're going to give up on using the dollar, let's say China is doing trade with the Philippines, instead of using the dollars, they're going to pay the Philippines with yuan. The Philippines might not trust the yuan as much, so they can just take gold. Or Saudi Arabia, they're also looking to, I think, the Shanghai Gold Exchange. They're opening vaults like in third countries, like they're opening one in Saudi Arabia. So I think it's all part of making the yuan, the renminbi, more international. Long term, we've been in a bull market since 0102, but then we had that correction and big consolidation for like 13 years, from 2011 till actually beginning of last year when we broke out. So yeah, long term, it's been 11 years, but I think this is a new leg now. So we're still like in the first few innings, if you want to use baseball terminology, maybe the third inning. And I think we're only just beginning. Yes, we're going to see a lot of ups and downs and noise in the short term, but longer term, I think one needs to just hold on to it and go for the ride.
Absolutely, absolutely. So still early for gold. We've got some time to go. I like the baseball analogies. I think they always help to put it into context. So when you're looking at gold, there's so much going on. What are the key drivers, or maybe we start with the top driver that you're looking at when it comes to the gold price right now?
Yeah, I think it's been the central bank buying since 2022, the accelerated increase in net buying. I think it's been like over 1,000 tons net buying from countries in the what's called the Global South, or BRICS, whatever you want to call it. Even countries like Poland have been buying a lot of gold. So I think it's all central bank based, and the reasons for it are a few. One of them is the fact that the West, and specifically the US, has been punishing countries via sanctions for a while now, and also what happened in 2022 vis-a-vis Ukraine and Russia. That woke a lot of countries up, and they realized that their fiat reserves are not safe. So one alternative is to have physical gold in your vault, and I think that's one of the reasons why. And I think the smart money, they're starting to realize that there's a problem, and they're starting to buy gold. Even though I saw the other day a bar chart of family office holdings, and they still only hold like 2% of their assets in gold. So it's still early days. So yeah, I think it's the central bank buying, and also the Basel III rules regarding gold as a high quality liquid asset, and the tier one category. And I think China as well, they've been huge buyers. They've been encouraging the public to buy gold. They also told insurance companies now since February that they can put up to 1% of their assets into gold. And the Chinese, they buy gold, they buy real physical gold. They don't do the futures. So I think that's also hurting the paper game on COMEX and LBMA. And it's one of the reasons why I think the gold price is accelerated. And also the debt situation in the US. We've seen the big, beautiful budget according to Elon Musk, now is disgusting, and I agree with him. So, yeah, I just saw a meme that said, "How do you solve the problem with too much debt?" And then there's Trump, more debt, you know. So, I don't think there is a solution short of triggering an economic collapse, a Great Depression, to write off the debt and I don't see politicians doing that in the US nor in Europe. So we're going to continue to see gold go higher.
After more than a decade of consolidation following the 2011 peak, gold has entered a renewed bull phase. This breakout, which began in early 2023, signals we're still in the early innings of a much longer trend. Like a baseball game in the third inning, there's plenty of action ahead. Despite short-term noise, the long-term outlook remains robust as global economic uncertainty drives demand for real, enduring value. Since 2022, central banks, especially in the global south, have been aggressively stockpiling gold, accumulating over 1,000 tons annually. Nations like China, India, and even Poland are reallocating reserves away from US dollars, seeking safety from geopolitical risk and sanctions. The Russia-Ukraine war accelerated this trend. Gold offers a non-political, physical store of wealth, unlike fiat assets, which can be frozen or weaponized. This shift marks a profound global monetary realignment.
EU banking sector, they adopted Basel III vis-a-vis gold in 2023 already, beginning of 2023. The UK and the US haven't, and the US is supposedly that's the thing about Basel III. It's not very clear, and you've had the LBMA come out and say a few things that basically negate the whole story. But I think, yeah, the U.S. banking sector, they're looking to adopt Basel III and gold as a tier one asset. And all that means is that allocated physical gold is going to be like risk free, and unallocated won't be. So banks will prefer to have physical gold. And I was listening to another commentator the other day, and he said that the reason the BIS, who does the Basel III regulations, they saw that during COVID, there's a major trouble with the bullion banks, LBMA and COMEX, because it was highly leveraged, unallocated, and the market almost collapsed. The gold market, not in price, but the whole system. And that's why they want to impose the Basel III rules for banks that, yeah, if you want to trade gold and if you want it to be spot, it has to be allocated and tier one asset, and you have to follow the Basel III rules. So it looks like the US banking sector is going to adopt it. Maybe that's why there's been so much physical gold flowing into the US, like from late last year to earlier this year. As for the UK banks, I'm not sure if they're going to adopt it. I think the LBMA is still trying to, yeah, they're not happy about it because the LBMA market, the bullion market in London, is very paper dependent, and this is going to spoil their game, where they make a small profit from hedging physical versus paper. Yeah, so that's how I see it.
Under Basel Roman III regulations, gold has been reclassified as a top-tier Tier 1 liquid asset provided it's physically allocated. This incentivizes banks to hold real bullion over unallocated, paper-based gold. Europe has already adopted the rules. The US may soon follow. These changes aim to stabilize the gold market after 2020's near meltdown in the LBMA and COMEX. Physical gold's growing dominance threatens the long-standing leverage-based paper gold system. China is strategically positioning gold at the center of its monetary expansion. By allowing insurers to hold gold, promoting citizen purchases, and building offshore gold vaults, including in Saudi Arabia and Singapore. China's creating a gold-backed foundation for cross-border yuan use. With the Shanghai Gold Exchange opening to foreign investors, China is shifting global gold price discovery eastward. This transition may ultimately challenge the U.S.-led financial order and strengthen yuan credibility in global trade.
I don't think it's related to tariffs because when President Trump announced that Liberation Day, a lot of information came out, and I think there was bullion was excluded from all of the tariffs. So, yeah, if all the gold went to the U.S. because they're concerned for tariffs, then we should see all the gold flowing back and the gold price collapsing, and we haven't seen that. So that's why I don't think it was because of tariffs. I think it's highly significant, and the fact that China is applying Basel III rules as well is basically disrupting the whole Western paper game. And the reason why I think China is opening up the Shanghai Futures Exchange to foreign investors is that it's all part of internationalizing their currency more and also making it more trustworthy. Because if you're going to give up on using the dollar, let's say China is doing trade with the Philippines, instead of using the dollars, they're going to pay the Philippines with yuan. The Philippines might not trust the yuan as much, so they can just take gold. Or Saudi Arabia, they're also looking to, I think the Shanghai Gold Exchange, they're opening vaults like in third countries, like they're opening one in Saudi Arabia. So I think it's all part of making the yuan, the renminbi, more international. That's what it's about, and I think it's highly significant, and it's gonna continue to put pressure on COMEX and LBMA because this is all physical gold that they're working with, and and it will facilitate trade, and people will trust more the yuan if you can exchange it readily for gold. And if you can keep that, the vault is in your country, that's even better. They're not just talking about Saudi Arabia, but Singapore, Hong Kong, and other places. There will be Shanghai Gold Exchange vaults. And so that's how I see the China situation. I think their gold and silver will be priced from China in the next few years. They're going to take over. And unfortunately, like you said earlier, the West doesn't seem to care about gold, but China does. And I think the amount of gold that they say they have officially, the PBOC, is a very small number. I think they have a lot more that we don't know. So, yeah, I'm not defending China here. I'm just stating what's going on.